Hi everyone, good morning. I am Santosh Mahapatra. Again, today I will work out a problem and solution or calculation of scope of total income according to residential status. It will mean that how to compute or calculate the total income of an assessee basing on residential status if an assessee is a ordinary resident, not ordinary resident and non-resident. So I will explain point-wise the financial transaction and it is mentioned in the board and how it is treated. It is mentioned in the board and how it is treated. So the first financial transaction that is profit from a business in Japan but receive in India. Profit from a business in Japan but receive in India. So the nature of income is Indian income. And it is taxable in all three cases. The total amount is rupees 1,20,000. So that's why it is taxable in all cases. I mean 1,20,000, 1,20,000. So it is taxable in all three cases. I mean ordinary resident, not ordinary resident and non-resident, as it is a Indian income. So first financial transaction, that is profit from business in Japan but receive in India. So the nature of income is Indian income. The second financial transaction, that is dividend from Indian company. The second one, dividend from Indian company. It's a type of Indian income. And it is taxable at present. So as dividend from Indian company, the nature of income is Indian income. So the rupees 10,000 is taxable in all cases. So it is taxable in case of an ordinary resident, it is taxable in case of a not ordinary resident, and it is taxable in case of a non-resident. So as it is a Indian income, it is taxable in all three cases. The second financial transaction. And the third one, profit from a business in Pakistan but controlled from India. Again I am repeating, the third financial transaction, profit from a business in Pakistan but controlled from India. It will mean that we are receiving certain profit from a business in Pakistan, but the business is controlled or managed from India. So the nature of income is foreign income, or we can say that it is a one type of foreign income. Or we can say that it is a one type of foreign income because the business is running in Pakistan but it is managed or controlled from India. So that's why it is a foreign income, and it is only taxable in case of a ordinary resident and not ordinary resident. So rupees 2 lakh is taxable in both cases. I mean it is taxable in case of a ordinary resident and it is taxable in case of a not ordinary resident because it is a one type of foreign income. And the next financial transaction, the fourth one, interest received from a non-resident. Interest received from a non-resident on the loan provided to him from a business carried on in India. So here I am repeating again, interest received from a non-resident. Interest received from a non-resident on the loan provided to him for a business carried on in India. So the nature of income is Indian income. Indian income because the business is carried on in India. because the business is carried on in India. So here interest received from a non-resident, it's a Indian income because, and rupees 50,000 is taxable in all three cases. I mean ordinary resident, not ordinary resident and non-resident. As it is a Indian income, it is taxable in all three cases. I mean resident, NOR and non-resident. So the next financial transaction, share of a partnership firm. Suppose a partner is receiving a share of a partnership firm. So it is exempted. If a partner is receiving any share of profit from partnership firm, then it is exempted. So it is not going to be taxable. So that's why share of a partnership firm that is exempted, no doubt it's an Indian income, but it is exempted. That's why it is not taxable. So the reason is that the partnership firm has already paid tax on partnership profit. So when a partner is receiving a profit out of the partnership firm, he is not going to pay any tax on such profit. That's why it is exempted, not to be included irrespective of residential status. And the next one, that is next financial transaction, income from house property in India but receive in America. Income from house property in India but receive in America. So the house property, if an SSE is getting any income from house property in India, then it will be treated as an Indian income. So here income from house property in India but receive in America, as the house property is in India and that person is receiving income from that house property. So the nature of income is Indian income. So it is taxable in all cases. I mean rupees 62,000 is taxable in case of a ordinary resident, in case of a not ordinary resident, and in case of a non-resident, because it is an Indian income. And the last financial transaction, that is income earned in America and received there. So the nature of income is that any income earned in America and the income is also received in America. So the nature of income is that foreign income. So when it is a foreign income, it is taxable only in case of a ordinary resident. So that's why rupees 80,000 is taxable in case of a ordinary resident. So it is not taxable in case of a not ordinary resident, and it is not taxable in case of a non-resident.